2024 has been a big year for the financial markets, with key moments shaping the economy. Here to break it all down for us is Michael Reinking, senior market strategist at the New York Stock Exchange. So, Michael, looking back on 2024, what were some of the most significant moments for the financial markets, and why were they important?
Well, thanks for having me on the show today. Yeah, look, when you look back at 2024, I think the thing that stands out to me the most is just the strength that we've seen in financial markets. This is the second consecutive year that we've seen U.S. indices up double digits. And for your audience, when you look at that benchmark index that everybody's familiar with, the S&P 500, where you're kind of investing your 401ks, that index was up over 20% for the second consecutive year. And that's the first time that's happened, since the mid-1990s. And that's really interesting when you think about kind of the parallels that we've drawn between, kind of now and then. And so there are four things that I think that really have helped propel markets higher this year. And the first of those is that AI revolution. We've seen kind of capital spending for technology infrastructures, data center build-outs, right? And that's really helped the U.S. economy to remain very resilient. So we've had a resilient labor market, consumer spending, right? And that's happening despite the fact that we're coming off of one of the most aggressive tightening cycles that we've seen over the last 2 years, to fight off, kind of inflation. And so now we're starting to also see the Federal Reserve has begun to ease interest rates. They've cut rates by 75 basis points since September, right? And that's going to help, kind of Main Street and your audience, in that we're going to see kind of lending rates moving lower, lower mortgage rates, kind of rates on credit cards, auto loans, right? And then lastly, the last main thing that I would highlight is that we've now removed the overhang of the election, right? And that is starting to create some optimism that we're heading into kind of a pro-growth, business-friendly environment, potentially lower taxes, and that sets us up really well for 2025.
So which industries or sectors really stood out this year, and which ones should we be watching as we head into 2025?
Yeah, so when you look back at 2024, the stocks that have really performed the best are those companies that have been beneficiaries of that AI spending, right? I call it the picks and shovels. So think about companies like semiconductors that are making GPUs or server stacks, companies that have helped with the construction of those data centers. But that AI trade has started to evolve throughout the year. We've seen utility companies begin to perform really well with this expectation of kind of greater power needs as we head into, as we move forward. And then, one of the things that it has done, though, it has created some concentration at the top end of those major indices as some of those big stocks continue to get bigger. But there is this expectation that we're going to see the breadth expand, as we head into next year. In terms of the AI trade, it is also evolving. We're seeing kind of software companies begin to benefit from that technology, right? And investors are paying very close attention to how management teams are messaging, kind of that AI, kind of their AI strategies and how they're going to use it to innovate, become more productive and more profitable. And then one last industry that I think is really interesting heading into next year is the financials, right? And we're looking at a regulatory environment that is going to be more friendly. There's some expectation that we could see a pickup in M&A activity, something we haven't seen in many years. And then for your audience, kind of most exciting about that is that we also are expecting to see a pickup in IPO activity, which is going to bring new investment opportunities to the public. From our seat here at the New York Stock Exchange, it is really exciting to be able to help entrepreneurs and business leaders and innovators begin to raise capital to help go and change the world.
Well, let's keep that focus on the new year. What are key economic indicators that you're watching?
Yeah, so I think there's a couple things to pay attention to, but one of those, the idea that we have to pay attention to kind of the economic indicators, but also how Washington policy is going to shift that as we move forward. So what I've said and continue to believe is that the U.S. labor market is the most important thing to pay attention to, right? Because as people have jobs, they continue to show a propensity to spend, and that kind of that consumer spending and domestic demand here in the U.S. Is really such a big driver of our economy. And if it were to slow, there would be kind of a trickle-down effect. Now, we've seen companies are running pretty lean, right? So we're not seeing any sort of suggestion that we're seeing layoffs, right? Because their companies have prepared for this recession that has never come, right? And kind of that it leaves us in kind of a positive setup, kind of for the labor market. The other thing to pay attention to is inflation, right? And when we look at some of the potential policies coming out of Washington, they do potentially have some inflationary impacts. When you look at the idea about kind of what President Trump has talked about in terms of immigration and potential tariffs, right? That is something to kind of pay attention to as we move forward. But overall, right, it does seem like we're in a pretty solid environment. And as I said before, there is this building optimism for things to come next year.
How are markets responding to the upcoming Fed decision?
Yeah, so there's a wide expectation that the Federal Reserve will cut interest rates by 0.25%, later this afternoon. But there is this expectation that we will see a shift by the Federal Reserve to suggest that the pace of rate cuts going forward is going to slow. After holding rates steady at about 5.5%. Since July of last year, they have cut rates by 75 basis points, and that is going to, the impacts of that is starting to feed into the economy. You're starting to see interest rates moving lower as we had talked about, and that's going to help the consumer, moving forward, and hopefully, kind of help preserve the positive economic backdrop that we have.
Well, Michael, this is great information. Where can we go to learn more?
Yeah, so we publish our daily market commentary on NYSE.com. That comes out before the market and kind of the middle of the day. And then I also host a podcast every Friday on the Inside the Ice House podcast feed. It's called Market Storylines. And we walk through, we recap kind of the kind of primary drivers and storylines of that week.
All right, Michael, sounds good. Thanks for joining us today.
Thanks for having me. Hopefully I'll talk to you again soon.